How much money do you need saved up for a down payment on a house? Well, like anything in real estate, it depends. It depends on your finances, it depends on your goals, and it depends on your credit. But in this video, I'm going to break down the different types, how they're most often used, and how much money you're going to need to get into that home. If this is your first time here, hi, my name is Aaron, and every week I'm helping buyers relocate to and throughout the greater city of Houston and the surrounding suburbs. So if you need to know anything about where to eat, sleep, live, play, hit me up morning, noon, or night. I'm your guy. It doesn't matter if you're a day, a week, a month, a year, 2 years, 3 years out. I would love to be a resource to you. If this isn't your first time here, welcome back to the channel. Hit that like button, hit the subscribe button. It really encourages me to keep doing content just like this for you. So sit back and let's hop right back into it. So the first thing that we got to know about buying a home here in the greater Houston metro is that there are so many different types of loans, and there's no one size fit all loan for everybody. Now there's hundreds of loan products out there, but I like to categorize them. I think it's easier to explain when you break them down into the different types of groups that they're in. And I would estimate that there's about 6 different types of loans that you can get to purchase a home. In this video, I'm going to actually use the website of a company that we use to purchase this home, and we're going to go over the different types a little bit more in depth. So going into this, we need to know that there are 6 basic types of loans that you are going to be offered when you're getting ready to get pre-approved for a home. And those 6 are your conventional, your FHA, your VA, your USDA, jumbo, and other, also known as non-conforming or non-qualifying mortgages in the greater Houston metro. Just as a quick recap, anybody can qualify for almost any of these except for VA. For VA, you specifically have to have done some sort of military service and have been honorably discharged or completed your tour. So this one is the one that's a little bit more specific for veterans. But all the rest of these, anybody can qualify for as long as you can qualify for a mortgage. And so hopping right in, the first type, conventional. Conventional is the one that most people think that they need and think that they want. Typically, conventional buyers are approved because they have the lowest debt to income ratio, they have very strong credit, and they have nice income, and they have nice savings. Typically on a conventional home, if you're buying just a primary residence, you can get in with a down payment as low as 1%. I've seen some 3%, 1% conventional. I've also seen some 0 down conventional, depending on how strong your credit is and how much you actually have in savings and how low your debt to income ratio is. So with conventional loans, if you put less than 20% down, you have a mortgage insurance tacked onto your bill. And one of the advantages of getting a conventional loan and qualifying for a conventional loan is that once you get to that 20% threshold, you can have that mortgage insurance, which is an additional payment towards your mortgage. You can have that removed, ultimately lowering your payment. And so yes, you can get into it with a wide variety of down payments. The higher your credit, the better. It also is contingent on kind of like what's going on in the world with interest rates and all those things that those specific branches or those specific banks are offering at the time. But I have personally had clients close with 0 down conventional, 1% down conventional, 3%, as well as 5% conventional. On the investment side, I've also seen some products for 10 and 15% down if you're buying a secondary home, or if you're buying a vacation rental, or if you're buying an investment property in the conventional space. So it really is going to depend on what you're trying to do, what that goal of that home is, what that property is going to be bought for. The range of down payment needed for a conventional purchase is going to be as low as 0 to 1% and all the way up to 15 to 20%, depending on whether or not it's just going to be a primary residence strictly, or it's going to be a secondary home, or it's going to be a vacation rental. It really is just going to depend on you, but you can be anywhere within that range of about 0 to about 20%. The next type of loan that we're going to talk about are FHA, and FHAs typically get kind of like this first-time home buyer rep, or this bad rep, because it is one of the ones that most first-time home buyers use, just because either you're starting out, you don't have the credit, you don't have the debt to income ratio to qualify for a conventional mortgage, or you don't just quite have all the savings that a traditional conventional buyer would have. But it doesn't mean that you don't have those things. It just means that for the timeline that you go to get approved, the FHA loan program is just the best one that suits you at that time. When compared to conventional, the loan program also typically has a lower interest rate. So right now, with interest rates being like 6.7 for the conventional, you're going to see something in the high fives for the FHA loans right now. FHA is not a lender. FHA is a government-backed program that allows the average person to qualify a little bit more easily. Those that have those student loans, those that have a higher debt to income ratio, those that don't have that picture perfect credit, those that don't have a lot in savings, FHA gives those type of people an opportunity to buy a home. And because that person is seen as a little bit riskier in most cases, there is a little bit of a fee tacked onto that payment every month that never goes away. So as long as you have an FHA loan, you are going to pay basically that mortgage insurance on top of your mortgage payment every month. But in my opinion, if the only way that you can qualify to purchase a home is using FHA, FHA is a much better way to go than continuing to rent or continuing to wait the years that it would take to get a conventional loan. Some of the main highlights of what's great for this program is that it requires a much smaller down payment. So 3.5% is what you're going to need in the event that you go the FHA route. The credit restrictions are way smaller here on credit when compared to a conventional buyer to get you at those best rates on a conventional buyer side. And so it's one of the lower barriers of entry to get into a home is to go the FHA route. But the biggest con with the whole loan program is that there's going to be that insurance that's with you for the life of that loan. And depending on your interest rates and what's going on at the time, that could be several $100s a month that you're going to pay each month until you either refinance out of that loan or you sell the home. And an FHA loan doesn't necessarily just need to be for your one primary residence. If you are going to do what a lot of my clients are looking at doing right now, which is buy a multifamily, they're going to be looking to stay in one unit and rent out the others in the duplex or triplex or quad that they are trying to buy out here in the greater Houston metro. So it is a great opportunity to also pick up what is known as a live-in future, basically real estate investment portfolio. If you can get in with 3.5% down to buy a property that can give you multiple units in one, it's a great opportunity to do so. The next type of loan are VA loans, and this one is specifically for my veterans, so let's do a deep dive on that one. If you have approved VA status in the US, use your VA loan. I don't care what any lender tells you, you will never beat the terms of a VA loan here in the US. They are just outstanding. They allow you to get into a home at a much lower cost than you would for any other loan product. So jumping right into the advantages of it, and this is why I really push all my veterans to use their VA status, and that's because you get no down payment. In the conventional, it's almost damn near impossible. I've only seen it one time where they had no down payment out of pocket, and that was like a specialized conventional program. For FHA, you're going to have 3.5% down. For VA loans, you have no down payment. Also, a benefit is you don't have that mortgage insurance. So the mortgage insurance that I talked about on conventional for having less than 20% down, and for that mortgage insurance that you have for the life of the FHA loan, you don't have that here. There's also limits on closing costs and fees that can be charged to a veteran, where for some of these other products, they can be a little bit wonky. Some of those incentives that they give you, they can wrap those into the loan and do weird things in the other loan products. The VA has specific departments that are looking and maintaining that these lenders are in order and doing everything right by you if you're going to be using the VA loan. The VA doesn't play about letting their veterans get overcharged for fees and any of this stuff. So for anybody that's not abiding by the rules, they lose their VA loan status very quickly. And so these are the safes that you have in place to make sure that you're not overpaying any junk fees to use your VA loan. Also, one of the benefits of using the VA loan is that they are also fairly low on the credit guidelines. I think right now you can get and use your VA status in the mid to low 500s. And so if you got the credit and you have some money saved up to close on the actual house and pay your closing costs and the fees associated with getting it, using a VA loan, if you are a veteran, is one of the best ways that you can go. And similar to the other products that we talked about, you can buy this property as just your own living single family home residence, or you can buy a multifamily property with this where you live in one and make that your primary unit and you rent out the rest. So just because you are getting a VA loan for a traditional single family home in Texas and in the US, a 1 to 4 or a single family home all the way up to a quad, looks the same when it comes to banking practices. So you can also get a multifamily property using your VA loan. The next type of loan is a USDA product, and this is for those places that are being developed in more rural parts of the city. And so a lot of these houses are the main subdivisions that are outside of 99 that we see popping up around the greater Houston metro. You don't have to necessarily be Little House on the Prairie to get some of these great benefits, but for any of those that are kind of very far from the greater Houston metro, a lot of these communities also qualify for USDA funding. And so although I know they're showing this Little House on the Prairie down here on the website, it is basically for a low to moderate income family or a low to moderate income area, typically more classified as rural. So places that used to be old farmland or old ranches out in the greater Houston metro, a lot of these communities that are being developed and turned into these planned communities that we know and love. So it would have been your Delrose, it would have been your Bridgeland at some point in time, it would have been your Ellisons, all of these places that are very far outside of the city limits. You would probably qualify for a USDA loan in those areas, and some of the benefits include no down payment. Again, it has to be in what is an area that was classified as rural. So as these areas develop and become more city-like, they're going to eventually lose their USDA status as they become more developed out there. But the further and further you go away from the greater city of Houston, the more likely you are to have eligibility for this type of loan. Also, because it is this special kind of category of loan, you can roll the closing cost into it. So in some of these instances where you go out to some of these communities where they're offering you 100% financing with no closing costs, is likely because they are using this type of loan product, the USDA loan product, to basically get you in financing wise for a rural loan. And similar to the FHA and similar to the VA loan, these also have lower credit limits. I believe it's like mid fives to low fives on this one as well. And the underwriting can be a little bit less restrictive because it's a rural loan that they're using, and it's typically used for lower to mid income families. It's going to be a little bit less restrictive than a conventional loan product would be. So on this USDA loan product, I haven't personally seen it been able to purchase like a duplex, triplex, or a quad, just because those type of properties aren't usually in rural areas. And so I haven't seen it be done, but that doesn't necessarily mean that it can't happen. I just personally have never seen it. So I've only used this when people are buying in either one-off properties out in the country, Little House on the Prairie style, or they're buying in a developing planned community that is outside of 99 in the greater Houston metro. This is one of the most, I would say, probably popular types of funding that they give for people that don't necessarily have the highest of credit, don't necessarily have great savings, and need help with the closing costs. This is one of the loan products that every preferred lender of these type of subdivisions is going to offer you when you come through the door. The next type of loan category is a jumbo loan. Now this is for a very specific type of house in a very specific type of price point. And so not everybody is going to be looking at this, but I want to do a deep dive just to give you some of the benefits and some of the things that you got to know about the down payment on this one as well. And so as I mentioned earlier, there's hundreds of types of programs, and one of the program that is kind of a spin-off of conventional is a jumbo. So a jumbo is basically a conventional mortgage that is bigger than the qualifying limits. Right now, I think the qualifying limits for a conventional home right now is somewhere around 800,000. And so if you are buying a house that is above 800,000, you can no longer qualify for a traditional conventional loan, meaning you would have to go to this specialized product that is known as a jumbo loan. And so based off of those terms, things change from the stuff that we talked about earlier for conventional financing to this type of conventional financing. And some of the advantages are is this loan can go up to $3 million. So you can borrow as high as $3 million for your primary residence for this type of home. And you can get in as little as 10% down. Depending on your credit, your status, your income, what you got in savings, you can get into a property as little as 10% down. I know that this number used to be much higher for jumbo loans. And so things are definitely, as the prices of things kind of go up in the market, it's definitely good to see that this number is coming down. But it is definitely more expensive to get a jumbo loan from a down payment standpoint as it is just a traditional conventional home. And that's because the amount of money that is potentially on the line in a jumbo situation from a lender standpoint is just a little bit more high risk and a little bit more risk reward for the bank, as opposed to going a straight conventional product. Now, the type of person that would need a jumbo loan is usually looking at a luxury property. And so it doesn't mean that you can't kind of bundle this into a duplex, triplex, or a quad if you found one that fit that category and was at that loan limit where you needed to exercise that right, then you would be able to do so. But typically the type of person that's going to be looking at a jumbo loan is looking at a dream home that they're planning on buying throughout the greater Houston metro. So it doesn't mean that you can't use this for an investor product like some of the other ones that we talked about before, the different loan types, normal, conventional, FHA, VA. Doesn't mean that you can't do it, but the type of person that is usually going to use this loan product is looking for a little mini McMansion or a luxury kind of dream home situation where they're building a one-off custom kind of high dollar home. But if you were to see a duplex, triplex, or quad in the greater Houston metro and you planned on living in one unit and it was above $800,000 that you needed to borrow, this would be the perfect product for you. And the last type are your other loans. These are your non-qualifying. These are your non-QM loans that are kind of specialty for your contract workers, your entrepreneurs, those that don't typically have a straight up 9-to-5 income. These are the type of loans that we can qualify for. Myself included, I would typically be categorized as someone that would be in the other category right now because I'm a full-time real estate agent. And because I have the benefit of being able to basically write off damn near whatever, and when it comes to tax time, it's going to show that the income, even though I may have generated a lot of income, that I offset that with a lot of expenses. And when it comes time to file those taxes and use those tax returns to get traditionally qualified, I typically wouldn't show the amount of income that I need to qualify for a nice size loan. And this is where the beauty of these non-qualifying or these non-QM or these other type of loans come into play, because they can get a little bit more creative with the documents that they need to show that you can actually afford the payment. And so some of the most popular of these is the bank statement loan. I know a lot of entrepreneurs and contract workers and travel nurses and people that I've helped that don't have that traditional pay scale and that traditional like salary income. They typically fall in line with the bank statement loan, where they're going to show a little bit more bank statements over time to show that, hey, on an average basis, I make $10,000, $15,000, $20,000 a month. I know that I write off a lot, but this is what I make on average. And the lenders at that point can take that information and give you a pre-approval based on the averages over an extended period of time. And some of the benefits, you don't require any tax returns, the low down payment. You kind of fall into that jumbo kind of category where you have to put a little bit more down because this is a non-qualifying, like riskier loan kind of type. But you can still get some nice loan limits. You can still use it for single family all the way up to a quad. You can do some creative things with a bank statement program. And so entrepreneurs, don't have any fear. You know, I know if you've ever reached out to a bank before, I know what that can look like. I know what that can feel like if you're thinking about getting qualified for a loan and you're just like, man, I don't have the income to offset all these things that I've written off. There's definitely a solution for you. And so you can buy, like I said, a single family home. You can buy new construction, resale, multifamilies. You can do anything you want to do with a bank statement loan if you are in that entrepreneurial track that doesn't have, or the 1099ers, as I like to call ourselves, if you don't have that traditional income or that traditional salary like the average consumer. One pro tip that I would leave you with is to never just get pre-approved by one person. Any person that has ever reached out to me and we're going to start the process, we're going to talk to a credit union, we're going to talk to a mid-sized bank, and we're going to talk to a mortgage broker, kind of like NRL is, just so we can get everybody's pre-approval in hand and make sure that they are offering you the best terms, the best programs, and the best payment, just for you. So that's basically it. If you are ready to have a deeper conversation about the product that could be the best for you, I would love to do so. All the ways to contact me are going to either be on the screen or in the description below. YouTube thinks that this is the best video that you should check out next. So after this one, go on ahead and do that. I look forward to hearing from you, and I hope you have an amazing day.